PayPal stock is down a whopping 80%. The question is, why has this happened? And more importantly, as investors, when is the right time to buy? After all, PayPal is going for a bargain. This is what we're going to explore in today's video. So don't forget to like, subscribe, and hit the bell notification. Don't be greedy, guys. Do share this with those who need to watch this. My name is Zahir Anwari. I'm the co-founder of SublimeTrading.io. We have helped hundreds of private investors over the past 10 plus years profit from trends in the markets through our simple to learn methodology. I also write for a number of publications, including Benzinga.com, and I'm regularly invited to guest speak on how everyday people can supercharge their stock's performance, focusing on the next 3 to 5 years. Now, before we get into the chart, let's look at PayPal a little closer. PayPal was one of those tech stocks that exploded during the pandemic. It acquired a ton of new users as it offered a safe and easy way to shop and send money online. As a result, the stock grew by a massive 280%. However, the 80% drop in price has no doubt been humbling. The question is, why has this happened? Now, could it be a casualty of, say, rising inflation, which has had an impact on consumer activity? Could it be the fact that PayPal jumped on the crypto bandwagon, and with the crypto market being in free fall, the knock-on effect was a slump in stock price? It could actually be far simpler than that and just be a correction in the tech sector as a whole, given how well tech stocks have performed post-coronavirus. The reality is that PayPal is still a giant of a company. The fundamentals are healthy. There's still over 400 million users. The accounts that are being set up are growing at 9%. Transactions are up 11% per account. The chances of a recovery in price are high. And so PayPal seems to be a genuine bargain at these low prices. But as investors, there's still an element of timing when it comes to buying the stock. And so this is really where the charts and technical analysis come into their own and trump fundamental analysis, as you can see exactly what price action is doing and make an informed, objective, non-emotional decision, which will drastically increase your chance of profiting. And remember, guys, doing all the analysis and the fundamental analysis in the world, and the stock price is still tanked. So what does that say? What that says is that the charts are a source of truth. It doesn't matter what your analysis is saying, how healthy the company may look on paper. If the stock is dropping, the stock is dropping. And that's really where the charts come into their own. So let's switch over to the charts. So this is our typical 3-screen setup when we are doing our analysis. In the top left, we have the monthly time frame. In the top right, we have the weekly time frame. And down here across the bottom, we have the daily time frame. If you like the look of this 3-screen setup and you want access to it, I'll show you exactly how to get this at the end of the recording. So just stick with me until then. Now, let's start with the monthly time frame. We like to look at the higher time frame and then work our way down to the weekly and then the daily. Notice we don't go into intraday time frames. There are no 5-minute, 10 minutes, 4-hour time frames. That's where you get into day trading territory, and ultimately where a lot of time is wasted and a lot of money is lost. You always want to stay true to the principles of good investing, which is to think long term. So the higher time frames allow you to do that. This is where you catch the big moves in the market, and ultimately for far less work. You know, we're busy everyday people. No doubt you've got a job or a career, family, hobbies. You want to be able to manage a portfolio around your lifestyle, and the best way to do that is by looking at the higher time frames. So let's start with the monthly time frame. PayPal first hit the stock market in 2015 around $40, and you could see it has been on this nice, clean, gradual increase in price. It created an all-time high around $310 in July 2021, and that's when price then went on this free fall, if you like. If you look at this area here, this is February and March of, let me just expand the chart so you can see it in more detail. Here and here you've got February 2020 and March 2020. This is when the impact of the coronavirus was first felt in the stock market. We had that decline, but from March, the low of March 2020, which was around $80, price then went on this huge increase of around 280%. It printed that all-time high in July of 2021, and since then price has dropped by around 80%, 75 to 80%. So a significant drop in price, and it's how quickly price has dropped that no doubt has people panicking. But as investors, we have to remain objective. Now, if you were holding PayPal and if you were in good profit during this run, then you would have had an exit management system in place, or you should have had an exit management system in place that would have locked in some profit or at least protected your initial capital when this decline came in. And that's really the hallmark of good investing. You've got to understand risk management and exit management. So when these reversals come in, you have nothing to worry about because your downside is already protected. Now, if you look at where price is right now, it's around that $72 mark. People may be suggesting or encouraging you to buy in at this point. You may already be buying in at this point based on your rules and your analysis. Just be aware that there is still downside potential. I mean, when it floated on the stock market, it was, as already discussed, around $40. So there's still downside potential to that level. So you've got to be careful about trying to pick a bottom. The best way to buy into a stock is when the market itself dictates a recovery, or when the stock itself dictates a recovery and a move to the upside. That's really when you should really start considering buying into the stock. At this point here where it's just dropping, you've got to be a little bit careful. If you move across to the weekly time frame, you can see prices below the 200 moving average. Our proprietary trend filter is red. Notice how red it is. There's only little bits of grey, and that's what you call a strong bearish market. It's when there's hardly any grey bars and just red bar after red bar. It's a strong drop to the downside. Now, crucially, prices below the 200 moving average. If you're not familiar with the 200 moving average, it gives you the overall bias to price. So if price is above, it has a bullish bias. Price is below, has a bearish bias. So prices below the 200 moving average, the trend filter is predominantly red. And if we come down to the daily time frame, if I just open that up, we can see that prices below the 200, the 50 and the 20 simple moving averages, the trend filter is red. Now, if price convincingly breaks and closes below this area of support, so if I just get my tool, horizontal ray, I'm just going to mark this pivot level. Let me just expand the chart so we're just marking this correctly. There we go. You can see that current price action is trading around this support level from May 2022. If we get a convincing break and close below this level, then we could see further weakness. Ideally, what we want to see is price find support around this level and then make its way back to the upside. Now, at the very earliest to consider buying PayPal from a technical perspective is when price breaks above the 200 moving average, because as already mentioned, above the 200 moving average, it's a bullish bias. Below, it's a bearish bias, and you don't really want to be going against the bias. Now, of course, there's an element of patience involved, but patience is a very underappreciated skill when it comes to investing. It stops you from getting into positions too early, and ultimately it allows for the market to recover and really stack the odds in your favor, because investing is a game of probabilities, not certainties. And so whenever you enter into a market, you want to ensure that you're entering into an environment where you have more chance of making profit than a loss. Buying into PayPal at this point here, not only could it lead to further losses with the market that continues dropping, or it may just choose to stay at these low levels for many, many months, even years. So you could potentially have your risk tied up in a stock that just goes sideways and doesn't return you a profit. So patience is always key here, guys. Look at the market as a whole. Look at the sectors as a whole. Look at which sectors are performing the strongest, and then narrow down to the best stocks in that sector. The energy sector, for example, is performing far better than the tech sector at the moment. So do you want tech stocks in your portfolio at this stage? It's questionable. Of course, this is down to your approach, but by doing what I've suggested, which is going through this scanning process of scanning the market as a whole, looking at the best performing sectors, looking at the best performing stocks in the best performing sectors, you will always end up with the stocks that have the highest chance of returning your profit. PayPal at some point will appear in that checklist, but for now, for us here at Sublime Trading, this isn't a stock that we want to have in our portfolio. It's just the odds are not in our favor, and potentially we could see further weakness. Okay, so those are my thoughts on PayPal. It's still a healthy stock in terms of PayPal as a company. The fundamentals still look good, but from a technical perspective, which is really where our priority is, PayPal doesn't look attractive, and it's not a stock that we will be adding into the portfolio anytime soon. Certainly not until PayPal starts at least dictating a recovery and that is when it starts moving above the 200 moving averages, both on the daily, which is this black line, and on the weekly time frame as well. And if it doesn't set up, there's plenty of other stocks, because remember guys, the aim of the game is profit and not being right. And I think sometimes people get that mistaken. People often put their ego first and they want to be right, when the priority should be about making profit. And when you choose to make profit, you will always focus on the best stocks. Okay, I hope you enjoyed that, guys. I hope that made sense. Don't forget to like, subscribe, hit the bell notifications. If you have any questions, do leave them in the comments. We do read them and we will get back to you. Now, the question is, where do you go from here? Well, if you click on the link in the comment section below, the link will open up into this scorecard. Are you ready to skyrocket your stock performance? Click on the link here, guys, on the button rather, take the scorecard. This scorecard will take you less than 2 minutes to complete. On completion of the scorecard, the results will tell you exactly where you are right now, the steps that you need to take going forward, and also we will give you 30 days free access to the Hot Stocks Vault. This is where we scan the market for you every single week, and we share with you the top 10 performing stocks in the stock market, saving you thousands of pounds in scanner subscription costs and hours, ultimately daily and weekly, finding these stocks yourself. We do all the hard work for you and then share the stocks. All you need to do is register and get access to the stocks. And as already mentioned, if you like the 3-screen setup that I did my analysis on, you will also get 30 days free access to that setup as well. And there's a stock of the month video, there's a community, there's a whole load of other goodies that go into this as well. So give your portfolio the foundation it deserves. You always need to have the right stocks in your portfolio at any moment in time if you want to see consistent growth on your portfolio. Hot Stocks Vault is the place to start. So click on the link in the description, complete the scorecard, and I will see you in the Hot Stocks Vault or in the next recording.